Traders Anthony here. I'm just looking at this imbalance, this gap here. Thin candle on the daily. Okay, we've got nothing left and right of it up until the low of this previous candle, and then we get that. Now this is traded into a key level here. This candle body, or close and open, and through here as well. And if you look further back, you'll see this is a big level. So we can see it rejecting here, and currently price is trading in here, ranging, and it'll be evident on the lower time frame. Now the other thing that's significant for me is this red candle, high to low, this range. This is an accumulation range prior to this bullish rally, and so this is an important level. What I've done is marked up the low here. We've broken through this low. That's significant because this has taken out liquidity that has been resting, grab that one, under this low prior to this move, right? So that's taken out stops under here. Big move. And when I'm looking at a chart, the thing that I'm looking for is, well, there's two questions. One is there an imbalance, as the market always looks to rebalance, and is there where is there resting liquidity? And what makes sense to me more than anything is the fact that we've got stops resting up here, so that's a target, and we have traders short, retail traders jumping in all through here with the build-up of stop losses all through this range here. So this is ripe for the picking. It makes sense that smart money will look to take out these stops, or at least trade it back up into here to feed on that, if that makes sense. All right, so I'm looking at it from that point of view, and also the fact that this is overextended and traveled into a big support level. So that's, I'm just sort of building an argument here for a buy at this level, looking to trade back. If we grab a Fibonacci, we take it from high to low. Look at that. See that the move back 38 to 50, not really a fib level, but that's halfway. And then we've got the 61.8. So, but in this range here, could be a suitable target. So that's that. What we'll do now is we'll go down to the 4-hour and get closer to it. By the way, guys, make sure you check out the link below and jump on board our free Telegram group. All right, here's the thing. 4-hour chart. I'm always looking for thin candle left and right. We've got an imbalance resting here on the 4-hour time frame. So that's a target. Copy and paste. Just picking the high of the low on the candle left, high on the candle right, and marking that up. All right, so these are definitely potential targets, and then we've got another one, kind of under here, and I'd be interested to look at that on the lower time frame as well. Not much, but it's still important. And the other thing we have is this balance area prior to this rally. That's going to be a target for a TP level. So we'll just mark that up as a 4H balance area, like so. What else have we got? And then we've got this area down here as well, this range. Okay, so we'll just pull that through. So this would be target 1 under here, and target 2 up in here. And I'm thinking that this trades back up maybe later on today, perhaps, but it's going to look to retrace before we get any more downside, I would think. Let's have a look at this on the 1H. Yeah, you see, these levels make a lot more sense on the lower time frame. Well, especially back in here and this one here. Okay, so these are the two key levels that I'm interested in. Hope that makes sense. So I'm looking to buy, and I'm going to go fairly wide with my stop with this. You know what? I'm going in with a market buy I'm going to set up a stop loss under this red candle back here at least. Just give it a bit of room to breathe. And I want to be careful. I mean, there's a lot of volatility in the markets, but something like that, I would do that, and then, I mean, that's quite a nice risk-reward setup. I'd be looking to take profit. Let's have a look. What do we got? Here we go. This is my risk-reward tool. I'll show you what I did with this. I'll open it up and you can have a look. Snapshot. You can copy it. See, that's my risk-reward tool. But I'm always looking left as well. Like it's got I want a 1-to-1 risk-reward or near 1-to-1. So I've got this 0.8 marked up. That's the bottom line for any trade that I take. I want that. And but I'm also going to be looking to see how that comes into play on the chart. And we have, this balance area here makes perfect sense that this is target 1. I would say right there on the 0.8, a little bit less than 1-to-1 risk reward, but that's my T1 level, guys. And I will take most of my position off there, if not all. Alright, so that's T1, and I mean after this we pull our stop loss up so that it's a risk-free trade. It's in the money. It might be a small profit, but at least it's in the money and risk-free. And just sit on it and see what we get. And I mean, look, ultimately, go to town with that. Like you just stay in there until, if you can, until you see a break of market structure. In other words, if this trends up, stay in there until it breaks the trend like this. Back in here, this is a break I'm talking about. Well, that's actually the break of market structure here that I'm more interested in. This is looking fairly bearish, given that we've broken this, but I'm thinking a retrace back up, before we see more downside. At this point, who knows? I mean, the markets could rally next week. But anyway, that's my play on the Aussie yen. It's an Asian session, potentially Asian session trade into the London Open. We'll see how we go. Yeah, click the links below, guys. Comment. Love to hear your thoughts on this. And with that, hope you have a great day. Safe trading, and we'll see you in the next one.